Petrobras, Brazil's oil giant, became the center of one of the biggest corruption scandals in history. Lava Jato. Billions were siphoned through inflated contracts, bribery, and political kickbacks. Investors trusted Petrobras, but the scandal wiped out market value, leading to massive losses. Stocks plummeted, lawsuits followed, and confidence in Brazil's corporate governance was shattered. How did such a massive scheme go unnoticed for years? The answer lies in a web of corruption that ran deep. Lava Jato exposed a network of corruption involving Petrobras, construction firms, and politicians. Contracts were inflated and bribes were funneled to secure deals. Investors who believed in Petrobras's stability saw their shares collapse. The scandal led to arrests, resignations, and billions in fines. But the damage was done. Trust in Brazilian corporations was severely shaken. Could investors have seen the warning signs? Many ignored red flags, believing a giant like Petrobras was untouchable. The Petrobras Pasadena refinery deal is another infamous case. In 2006, Petrobras bought a refinery in Texas for $1.2 billion, far above its actual value. The original owner had purchased it for just $42.5 million. The deal raised suspicions of mismanagement and corruption. Investors were outraged as losses mounted. How did Petrobras justify such an overpriced acquisition? The answer? Questionable contracts, hidden clauses, and a lack of transparency that cost shareholders dearly. The Pasadena deal became a symbol of Petrobras's reckless spending. Investigations revealed that executives approved the purchase despite clear financial risks. The refinery was outdated and required costly upgrades. Investors who trusted Petrobras's leadership were left with losses as the company struggled to justify the deal. The scandal reinforced the need for corporate transparency. Could better oversight have prevented this? Many believe stronger governance could have saved billions in investor money. Fast forward to 2023, and another corporate disaster shook Brazil. Americanas S.A. One of the country's largest retailers, Americanas was trusted by investors, but suddenly a $4 billion accounting fraud was uncovered. The company had hidden debts for years, inflating its financial health. Investors were blindsided as shares collapsed overnight. How did such a massive fraud go unnoticed? The answer: deceptive accounting practices and a lack of proper financial oversight. The Americanas scandal exposed deep flaws in corporate governance. Executives manipulated financial statements to hide billions in debt. Investors who relied on these reports were misled into believing the company was stable. When the truth emerged, stock prices crashed, and lawsuits followed. Could investors have detected the fraud earlier? Some analysts had raised concerns, but many ignored the warnings. The case proved that even well-established companies can deceive shareholders. What do these cases teach investors? First, never assume a company is too big to fail. Petrobras and Americanas were giants, yet both collapsed under scandal. Second, always scrutinize financial reports. Hidden debts and inflated contracts are red flags. Third, corporate governance matters. Weak oversight allows fraud to thrive. Investors must stay informed, question inconsistencies, and diversify their portfolios. Trust is valuable, but blind trust can be costly. Regulators have since tightened financial oversight, but challenges remain. Companies still find ways to manipulate numbers, and enforcement is often slow. Investors must take responsibility for their own due diligence. Learning from past scandals can prevent future losses. The Petrobras and Americanas cases serve as stark reminders. Corporate fraud is real, and no company is immune. The best defense? Stay informed, ask questions, and never ignore warning signs. Despite these scandals, Brazil remains a major investment hub. The market has recovered, and new regulations aim to prevent future fraud. But trust takes time to rebuild. Investors must balance risk with opportunity, learning from past mistakes. The Petrobras and Americanas cases were painful lessons, but they also pushed for stronger corporate governance. Will history repeat itself? Only time will tell, but one thing is certain: investors must always stay vigilant. Financial scandals will always exist, but informed investors can minimize risks. The Petrobras and Americanas cases highlight the importance of transparency, oversight, and skepticism. Never assume a company is safe just because it's big. Always question financial reports and diversify investments to protect against unexpected losses. The best investors learn from history. Will you? Stay informed, stay cautious, and never let corporate deception catch you off guard again.